Hi everyone, today let's talk about the inflation data. Then we'll look at the usual data, the charts, and of course my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So CPI data rose 0.3% and the annual rate pushed to 3.4%. That was higher than expectations. What we wanted to see was 0.2 and 3.2, but that is not what we got. We got a higher read, a little bit hot. We did see the core numbers tick down, which is good. So the previous read was 4% there. We did come in at 3.9, but you can see pretty significant tick up on the headline number from 3.1 up to 3.4. So that's a substantial tick. We're not seeing core come down nearly as fast as it was doing here from September of 22 to current levels. And markets definitely did not like that. You can see the tick up. Markets dipped pretty early in the session. I thought we would see a bigger sell-off. We ended up rebounding into the end of the session pretty aggressively, which was interesting. Honestly, I expected more follow through on that number because this is going to hamper the Fed's ability to bring in cuts early in the year. And this is even with energy coming in lower than the previous read. So we're seeing energy come down. We've been seeing oil come down. And even with that, we're still seeing inflation tick up, which is not a great indicator. Again, to me, that means we're probably not going to see a cut in the first half of this year. We could see better data maybe in the springtime, but if this trend continues, I think markets are in for a little bit of a rude awakening on inflation going forward. We'll take a look at the DraftKings charts, but they are in the news today because Vermont did open. They continue to add more and more states to their portfolio, and this is another one here. So Vermont is the 29th state, along with Washington, D.C. to allow gaming. And DraftKings was doing really well during COVID, and then it pulled back really significantly. And then it kind of bottomed out, and it's been rallying here recently. We'll take a look at it on the charts. They say Vermont is expected to raise up to $7 million from sports betting over the full year, and that's just on the taxes. So in terms of revenue for FanDuel and DraftKings, that could be quite substantial. And they mention here, DraftKings took in about 31% of online sports betting and casino revenue in third quarter of 2023, beating out FanDuel by 1%. So the stock has rallied super aggressively as they continue to expand, and this is another piece to their puzzle. Continue to see bullish days. They say the NASDAQ was up 12 and down 9 here for the 11th. So expected to be bullish. Even with the weak CPI number, we ended up slightly bullish. We have PPI tomorrow. We'll look at the economic calendar later. I was honestly a little bit surprised we didn't see a little bit more weakness coming from that expiration for options next week, but definitely something to keep in mind. Economic calendar, you can see all the CPI data coming in a little bit higher than expectations. They mark it green, which I think is a little bit interesting. And then the federal budget came in way over, about double the deficit than they expected. And then looking at tomorrow, we do have core and headline PPI. That's going to be interesting. And that pretty much wraps it up for the week. Don't forget, Monday is Martin Luther King Day, so the markets will be closed. So anything you hold into the weekend will be held all the way until Tuesday. Moving over to Max Payne, look at all of those puts coming in. So you have lots of put peaks here. 476 came down here to 28,000. Next call wall 480. Max Payne up at 472, current stock price 476. So it looks like we might end up at the top of the puts, which would give you about another 0.5 to 0.75% higher tomorrow. Total options up to over 1 million, so it's a little bit more formidable here now. Put call ratio at 1.56, a little bit more in line with what we've been seeing. And this does look a little bit bullish going into tomorrow's session. Off with the S&Ps, let's go ahead and look at that chop that we saw on the day. So we had the initial announcement, it threw a wick to these pre-market highs. We did push through my level, which was just a temporary level here at 477.28, gapped through it pre-market, news came out, fell, threw a wick to the upside, fell some more, all the way down here to 472. That was technically a lower low versus this previous low here from yesterday's pre-market. And then in the end of the day, you can see we rallied pretty aggressively, 3 strong candles in a row, technically a lower high versus this most recent peak, but we're above all the EMAs and SMAs. Momentum is ticking towards bullish, so that does look quite clean to me. And then looking at it on the daily chart, let's go ahead and move this right shoulder This is a higher peak now than this left shoulder, but we're right in the same range versus the head. So if it's going to fall, I would expect it to do it tomorrow. Momentum did continue to tick towards bullish, but we're right on top of the RSI here. And this is one of those critical points. I want to go ahead and maximize this so you can see it. RSI coming back into engagement with that SMA. If it breaks back below here, which technically it is right now, RSI sitting at 63.93, SMA sitting at 64.06. So we're just barely below it. If this breaks down here tomorrow, that could be a very interesting move. And you can see on here previously, you get the break, almost a retest, bigger break. We're getting another test. If this breaks down, that could be more significant, looking for a lower low below that 50 line. So interesting stuff here on the charts. Critical day tomorrow, a little bit of a hanging man candle. I don't follow candle patterns too much, but something to watch. Could go either way, but looks slightly bearish to me. Similar thesis, big move down pre-market, got all the way down here to 404 after topping out around 411. So that is a very wide move. It's about 1.5% of daily range. So wide daily range. We're still below this previous high here, but we're still positive on the day, 0.21% to the bull side. Momentum continues to tick to the bull side. And you'll notice RSI here is above the SMA, so not quite the same technicals as the S&P 500. So again, to me, this looks a little bit more bullish, and you'll see I did adjust my positions here a little bit today. Up to 412 would be your price target, as long as 408.81 continues to hold. We are down a little bit after hours, but still holding that level above all the EMAs and SMAs on the hourly chart. Moving over to the Russell and the Dow. Russell, hanging man candle, all the way down to 191.81. Held that level, bounced, momentum ticked down. Let's look at it on the hourly chart. Pushed up to the 144, dipped all the way to that level, bounced to the 9 EMA. This does look more bearish here for me. I think I rolled my calls down and in a little bit. The Russell looks quite a bit weaker. The Dow was positive on the day by 0.06%. Momentum looking okay. Let's look at that on the shorter time frame. Yep, basically finished right on its high. It's pulling back a little bit after hours, but nothing breaking here in terms of structure on the Dow. Russell looking much weaker. Here you can see it's been in a pretty consistent downtrend. Let's go ahead and give that a bottom to that trend. So your trend support would be down around the 144 EMA on the daily chart at 31.18. But you can see we did throw a wick to the downside here today, and it held as kind of a higher low. So let's look at that on the shorter time frame. You can see here we had that bottom at 32.17. That is your most recent horizontal support. And then we pulled back to this higher low. So you could argue much higher low than this previous one. RSI quite a bit higher as well at 48.49. Still technically a downtrend. You want to see it get above this structure at 34.49 and this downtrend line, as well as the longer term EMAs sitting at 33.94 and 34.34. So quite a bit of resistance. And you can see it tried to do a similar move here where we dipped low, established a higher low, couldn't quite get above here, and then it broke down pretty significantly to a new low. So something to watch. We're at a higher low, looking for a breakout. If it gets above this structure from this most recent downtrend line, that could give you an interesting trade off of that breakout. So I'd be patient. Does have some potential, but it's kind of in no man's land. You don't really know if this structure is going to break. And that gives you about 4% down move until you know that you're wrong, making a new low here. And you're looking for about a 3% break. So it's kind of a one-to-one trade. If we at least test these resistance areas, if it breaks out, you could be looking for a move up to these previous highs around $36. So that would give you a little bit better risk reward, about 4% to those most recent highs. And then you have a very tight stop from that look. So something to watch for here on DraftKings. Apple and Tesla. Apple did break down pretty strongly, down to that 55 EMA, touched it here on the 2-hour chart, held that level and then bounced. We are below this trend line that I was watching. It's not a super strong trend line, just a short-term one here, but we're right at it. If it breaks above it, we start to look for a higher high. That could be interesting, but the trade really was on this 55 EMA. That gave you some pretty solid upside here. About 1% move off of that level with a really tight stop. That would have been an interesting trade there. Looking for a breakout above 186.81. Looks okay. And then Tesla, as we suspected, this 232.57 level. We broke below it really strongly on that first candle of the day. Continued lower all the way down to 225. Like I said yesterday, next support for me down at 214. See if we can find anything better here on the daily chart. Not really. So Tesla kind of in no man's land. You could argue maybe the top of this consolidation around 224. We're starting to touch those wicks here on that shorter time frame there. So you can see from these wicks going back to the beginning of November, we're right at that level. I do not view that as a very strong level. You could also argue the bottom here from 17 November, but we're below all the EMAs and SMAs on the daily chart. Momentum bearish, RSI bearish. Realistically, I'd be looking for that 214 area. Moving over to staples and discretionaries, both of these were basically flat, not giving really any additional information. Still holding 72.50. We're above it here at the end of the day after throwing a pretty big wick all the way down to 72.06. Momentum basically flat, RSI slightly bullish. Momentum on discretionaries continues to look okay, but movement here, inside candle, hanging man style candle. Let's look at that a little bit closer. We're above the short-term EMAs, but below the longer-term ones. So in consolidation, you could say we did hold that 55 EMA. So that's interesting. Realistically, you want the 21 to hold. You want the 9 to get back above the 21 if it's going to rally. Right now, kind of in no man's land, looking for that 55 EMA to hold. That's about 1% down. And then looking for a breakout above the 144 or the 200. It's about 0.75% higher, so a little bit more risk than reward to current resistance, and the longer time frame does look weak. These were still negative on the day, so did gap higher, did test the 9 EMA and VWAP, did start to break down, so that's not great. Energy continues to hold these lows around this 132 area. We did close here at a new low. That's a new low for the close, so that's not great either. It does continue to look pretty weak. Support for me down at 129.40. Energy did establish a slightly higher low. Momentum is ticking towards bullish. I did consider getting a new position here, but I just want to be a little bit patient. I think there might be an opportunity tomorrow. It's an inside candle. Momentum still bearish. RSI still bearish. And you can see it's up a little bit after hours. And you can see that here on the hourly chart. Let's go ahead and look at that a little bit closer. If this breaks back above this resistance up here at 82.32, and then you got this other shorter term downtrend line in that same area. If it breaks back above that tomorrow, could be interesting. Argue slightly higher low, momentum looking a little bit better on the shorter time frames. But just be patient here. We've already broken several support lines, and this is still quite weak on the longer time frame. These pushed down quite a lot. I was honestly surprised, especially with inflation coming in a little bit higher than expectations. Apparently that was not priced into yields. 2-year fell a lot, 2.64%, back below my 4.26 level, back at these previous lows, momentum rolling over, back below all the EMAs and SMAs. 10-year, it did fall, but not nearly as much. It's back at my 3.97 level, almost right on top of it, almost right on top of that 9 EMA as well. Still below the trend line, but holding at a higher low. I still think we're going back towards reversion here pretty soon, so the 2-year falling pretty aggressive, back towards that 4% area, and then the 10-year holding up in this zone. RSI does look quite a bit stronger here on the 10-year as well. Surprised how much this did not move here today. Interesting. Momentum bearish on both of these now. So hourly momentum is bearish. RSI looks weak. This consolidation is starting to fade. Momentum on the daily chart starting to fade. RSI, like I said, bearish on both. Kind of seems like this is going to break back down in my opinion. JNK broke out, super big move. So we gapped higher, dojied, gapped again, and then we rallied off of that gap. Momentum towards bullish, looks good. Back above 94.82. So that's good as well. Confirming rally, which is what you want. And then looking at TLT, almost engulfed the previous candle, right back to that 200. That 200 seems to be a very critical level here on the daily chart, sitting at 96.88. If we break above that, that could be interesting. Still below the 921 and VWAP, but momentum, look at that, did step back towards bullish. Lots of volume on that candle after touching this high going back to 6 December. This actually looks quite a bit better to me here on TLT going into tomorrow's session, looking for a break of that 200. Both of these cratered. Move index continues to crater, much lower low than this previous low now. Looking back towards this 96 area. Bonds finding strength, and then looking at the VIX, through a big wick to the upside on that initial volatility. And you can see here we're right back to that shorter term support in that 1230 area. If it's going to bounce, you would think that it would probably do it now, but at this point I'm looking more towards this low on 13 December, closer to that 1177 area. All of the supports have broken so far, and you expect that to continue until it starts to show some structure. I did go ahead and get that banking issue fixed, so we're back up to 113,000, made a little bit of money on the day, so almost up to 114,000. You like like to see it. And you can see on the IWM, I did roll down and in a little bit to 22 days from now for 187 for $7 credit. So that puts my max profit up at 194, which is basically right where we're at. I do think the Russell, it looks a little bit weak going into tomorrow and potentially next week as well. The inflation data didn't really affect big tech or the SPY either. So SPY and NASDAQ did okay, Dow did okay, but I think the IWM is going to get pulled down by that inflation number. Qs, like I said, bullish. I did roll out a little bit here to 400 for $14 credit. Give myself a little bit of opportunity on one of those sets of covered calls. Other ones still here at 396 for $15 credit, which does put my max profit here for 29 days from now up at 411. So only about $2 potential for profits for that position. If I have to roll it out to 45 days, I absolutely can, but realistically, I would prefer not to. And I am a little bit concerned about the weakness that we saw as a potential lower high going into the end of this session, following through into the beginning of next session. To my profit and loss graph, you can see I did give myself a little bit more opportunity for upside on that second covered call, sitting at that 400 level. I also took in a little bit more credit here today, so my max profit theoretical at expiration is up at $6,100, and I can continue to roll out if I need to as prices continue to go higher. But I think I'm in a good position here. A little bit of opportunity, but still pretty protected to the downside. My break even is down at 383. Think of the inflation data and how it's going to affect markets going forward and when we'll see that first cut. Also, let me know if you like DraftKings. Are you looking for a trade there? And if you got value out of this video, make sure you like and subscribe and hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.